Hi, welcome to the video day, which is on the 3rd of October. It's Monday. In today's video, we're going to give our weekly Forex forecast, pick out pairs which we think could offer really good risk to reward trading opportunities for this week. Now, in terms of pairs, plenty to look at. We'll go over the charts in just a moment. Now, we have really high volatility at the moment, which is exactly what we want as Forex traders. And that volatility will not be dying down anytime soon. In our view, we've been bullish of the USD for many, many months. We're not changing our long-term bullish stance. You will see corrections, but those corrections will be buying opportunities. Now, also this week, we're interested in plenty of trades in the crosses as well. So what we're going to do now is go and take a look at the opportunities. But just before we do so, if you want to learn our trading strategy, all our trading techniques, and check out our daily technical sentiment analysis of 14 FX pairs, if you go to the link beneath the video, you can get live access to our member center. For a limited period, you can get a reduction on our membership fee. We are priced in US dollars. The dollar has surged this year, so there's a discount to take that into account. For anyone outside the US, just put the coupon code in at checkout to claim the discount. Now, also, you can join our free educational mailing list beneath the video as well as follow us on Facebook and join our Facebook group of traders if you wish. Right, let's go and take a look at the opportunities. Right, we're on USD CAD. It's the monthly chart, just to see the big picture before we go to the daily chart to our levels of entry, stop and target. Now, in terms of this pair, it's been our favorite in the USD pairs for a few weeks, and we featured it obviously in previous videos. We were looking for a push up from the 130 level. It did it really nicely, getting above 138. We've now eased back. I think the pullback is a buying opportunity. Okay, we'll do the levels of entry, stop and target in a moment. But in terms of targets on the monthly chart, we're looking for a move up to the 140 level here, and then a run on possibly up to test this tail here, this tail here. I've gone for 145. Okay, so if that view is correct, that's near enough 900 pips more on the upside. Now, we say this just for new viewers, when you're making ambitious projections, you can't do that from the technicals. You need to know the big fundamentals and sentiment behind the chart. So I just quickly want to review, just take about a couple of minutes, is the bullish fundamentals for the dollar against the CAD and just generally. So if I go here, this chart here I showed last week, it shows leveraged funds, their positioning in the dollars. This is big money, hedge funds, etc. Very long of the dollar when they came into the new year, but they've been kind of shedding dollar longs, and they did a sell of dollar longs there just at the end of September when the dollar surged higher. Now, we know that leveraged funds, big money, is not overweight in terms of dollar longs, so that's why we don't expect a big correction. Okay, in fact, we think leveraged funds have kind of missed a lot of the dollar rally. If you look at hedge fund performance, it's not that great at the moment, so I think they might be looking now to buy the pullback and support the dollar on dips. Now, in terms of I know I've shown this chart a few times, very simple. You should just keep it in mind. If you've got a US recession or a synchronized global slowdown, the dollar is firm. Okay, and we do have a synchronized global slowdown, possibility of a US recession. I'll just flick to this chart here. ISM indicator shows a global economic outlook going forward worse than 2008. This is a really forward-looking indicator, and we're moving down. Okay, I showed these charts last week. A lot of people saying global economy, will it have a recession or not? It's already in recession. This is the sales manager index from World Economics, and this, when the new chart comes out, will dip down a bit. It's below 50 in contraction. It says US economy teetering on the brink of a recession. If the US economy does go down, I think it might avoid recession. Recession is bullish for the USD. Okay, so the dollar is supported by really big fundamentals. Hawkish Fed, who are not going to back down. In our view, inflation is too high, so they'll remain hawkish. Dollar always does well in the global slow up, and you've got the potential for a sell-off or more selling in stock markets. We're going to cover them this week, but we think stocks could sell off even further to the downside. That will firm the USD. So it's looking bullish for the dollar. So now let's go and take a look at the levels of entry, stop and target first in USD CAD. Right, USD CAD daily chart, nice strong move up from 130, correction there, up, and we're having a correction this morning. Now, in terms of anyone new to our videos, when we do our technicals, they're very simple, just big levels of support and resistance. We look at volatility via Bollinger Bands and momentum as backup. We've already got bias from the sentiment and fundamentals behind the chart, so we keep the technicals simple. We'll also only look at price action twice a day, once in the morning when I drew this chart, and once in the evening, i.e. now, and I'll look at the chart where the price action is in a moment, and we can decide if we need to make any changes. Now, in terms of, for me, this is the big level of support at 136. Our stop is behind that level. Okay, now if we look at price action now, we've come down through 137, but we're holding a 136. Okay, for fresh positions, I just think you want to go back through the round number, get clear of the bodies over here. So I'm going to say 137.35, and then the stop can go back behind the next round number, these three bodies here, say 135.70. Okay, if we were to run on through 136, you buy back through the round number, in my view, through the bodies, 136.30, then have the stop back behind the next round number, 135.70. Coming in through round numbers is a really good way, in my view, getting into trades. In terms of, there's always a lot of order flow around the round numbers. If you cleared the number, certainly in this pair towards the upside, then you'd be looking for follow through. So I just see this as a natural correction like this. Okay, big trend is up. We'll see if we can get up to our monthly targets. Next pair, AUD USD. Now, in terms of this one, we've had this one for a long time, since 70.90 back here. It's been a really good downtrend. We are trying to get clear of the 65 level, but we've kind of failed so far. How would you play this one if you wanted to come in fresh? Let me just look at the price action right now. Sorry, AUD USD. Coming up, as we come through 65, okay, let's hope our stop is missed, okay? But if you're coming in fresh, just sell back away from the round number, 64, let's say 70, 30 pips away. Or if our stop is run, okay, we would just look to sell back through 65, stop behind 66. Okay, next round number. This mid Bollinger Band will also come down and provide resistance. We think, we're going down to the 60 level. And I might extend this target actually towards 55 or to 55. I still think a lot of downside. I know it's been a great downtrend. I still think there's more to come. In terms of commodity currencies, particularly the Aussie dollar, watch this chart. It's the US dollar against the Chinese yuan. It's a monthly chart. The dollar has surged higher. Australia, big trading partner with China. If the yuan goes down, that impacts on the Aussie dollar. And I think we could actually run above the 720. They might even devalue the yuan, the Chinese. I've mentioned this in previous videos. That would really hurt Aussie and all commodity currencies. Okay, so let's go back. Where do we want to go to next? I want to go to Euro USD. Right, from the Euro USD. Now, since I did my last forecast, our short trade we took just below the 101 level was taken out on this rally, and now we've re-entered short again. Now, in terms of this rally, it's about 200 pips. I just think that is a correction of oversold, took out weak shorts. The big trend is down, so I see the euro as a sell. Wait, I'll go and look at the price action in a moment, but move through today's low. You got resistance here, then you've got bigger resistance here on the next round number back, which is also the 20-day moving average. It's still a long way to go on the downside. 90 in our view. You can see where our stop is at 99.40. We're about 30 pips underwater at the moment, but hopefully that will turn around. And if we look at Euro USD tonight, I think through the low of the day, say 97. So I can't get my cursor. 97.40 would do. And then see if we follow through to the downside. If she leapt through 98 again, you could just always sell back through the round number, say 97.80. Now, in terms of the euro, if you look at the big picture, this is the monthly chart. Look at that for a fall. There's still far more downside to come. A lot of people say, well, euro bad news could be peaking. It isn't going to peak anytime soon, in our view. The energy crisis is as bad as the 70s. This compares the US blue line with Europe grey line in terms of the shock of energy prices, and Eurozone's being hit much harder. Okay, now of course in terms of the economy, I've got Eurozone PMIs here. They're collapsing to the downside. That points to a recession ahead. A lot of forecasters think Eurozone will avoid a recession. It will not. It'll be a long and deep one. If we look at the next chart, that was PMIs. This is consumer confidence, okay, which is just basically dropped heavily. And you'd expect that. Things are not going well in the zone. It's all going wrong. And also you've got political divisions coming. I'll just show you one more chart. There's plenty in the weekly market update in terms of bearish euro charts. This one, got it from Nordea a while ago with their projection of a move to 90. I think that is on the card. So, near enough 800 pips more to go on the downside. That rally is a selling opportunity for a couple more dollar pairs. Then we'll shift over to some crosses. Go to NZD USD, or bearish of all commodity currencies. This one has been, like the AUD, a really good run down for us. Only touched the 20-day moving average once in the fall. That's basically showing a really strong downtrend. We are fighting to get higher. Okay, we've got to stop behind 58.20. How would you play this one? Let's have a look at what we're doing tonight. We're looking at, there's my target 50, so hopefully 700 more pips on the downside. Sorry, I need to go here, don't I? NZD USD. Flick us to a daily chart. Trying to get through the 57 level. If we get above, let's say, 57.40, okay, look to sell back through 57 with a stop behind 58. Okay, if we fall down through the double bottom, below the 55 level, below the 56 level, say 55.80, then I think you could sell with a stop clear of this red high, and we got two bodies over here as well. So a strong downtrend. This is just a bounce in a bear market in our view. Where are we going next? We are going to go to sorry, on the wrong page. I want to go to a euro correlated currency I like, which is USD Czech krona. If the euro goes down, the Czech krona could well go down quicker. Okay, had a correction and we were kind of steady above double trend line support today. Now in terms of this one, USD CZK, we're just kind of steady. If we go blue on the day, I would expect to move up to 26, which is monthly resistance, and then possibly even higher. Okay, so do I need to do any more dollar pairs? I will do one more. Right, last dollar pair USD ZAR, which is an emerging market currency. It's had a huge move to the upside, the USD. Now, in terms of this pair, very volatile, you only need a small position. If this support holds, we're in a kind of channel break to the upside. Look for immediate follow through up to the 19 level. It gives you roughly a 3-to-1 in terms of risk reward from current levels. If we were to fall through this support line here, though, I'd reset my entry to come long through this level, which would be resistance, and I'd have my stop back behind this 20-day moving average, which has held the pullback here, only touched once since August the 15th. Okay, so that completes USD pairs. Now let's look at some crosses, and we're going to look at Euro JPY next. All right, so Euro JPY. In terms of our last video, we were short the Euro, got stopped out, and now we've gone short again at 141.50. Yeah, this is a correction oversold in our view, back to the 20-day moving average, struggling to get above the 142 level or get away from it. Okay, get through it, come back. What are we doing tonight? We're still the same, basically. Sell through 141.30 in our view. I think the risk reward, obviously, if our targets are hit, really good in this pair. The yen is still deeply oversold. And yeah, when I was talking about the euro earlier, obviously everything's bad economically, but what about the political divisions we're seeing? I think they could flare up. Russia-Ukraine is escalating. I just don't think the euro's got much upside, plenty of downside potential. Another euro pair, Euro GBP. I did a video yesterday on just trading big price spikes. Looking to sell the GBP in yesterday's video in a number of pairs, but not this one. We did spike higher, we came down, and we were lower this morning, okay? Where are we now? Sorry, EUR, GBP. Excuse me. Yeah, we had a lovely fall back to the downside. I'm looking for 86 tonight. My stop will come in behind this level here, 87.80. I wouldn't do this as a new trade, okay? But it just shows you, in terms of trading reversion to a mean price, we looked at it in yesterday's video and check it out. It's really good in getting you low risk, high reward trades, okay? One last euro pair, Euro CHF. Euro's rallied back up, okay? Now, my own view is Swissy is going to be really strong going forward. They don't have any problems with inflation in Switzerland like they do in Eurozone. They want to keep their currency, the Swiss National Bank, firm, keep inflation down. So I just feel the Euro rally is a sell. Also, the Swiss franc is a safe haven currency if we get really big risk off. This is a very simple one to do through the 97 level, okay? That's your first level resistance there, which was touched this morning. Double bodies and a tail. Well, actually, could take it across this body and that tail there. Then you've got the big 98 level. What are we doing tonight? EUR CHF. Not much, basically. Not much different from earlier on today. So basically, in terms of this one, this is a good risk reward trade because we're looking for not just chart lows, but a longer term run on to the 90 level. I think this one looks really decent. Also, just quickly now, want to update some of those GBP swing trades we were doing yesterday. So I'm going to go to GBP NZD first. Right, we're on GBP NZD and the huge move up in the British pound. We looked at the reasons why in yesterday's video. Pound moved the upside just well overdone, and we wanted to sell at 198.80. We're in, we're below 197, but still clear of the low. I think any rallies to the double top will fade. If we get through the tail, we should just follow through, hopefully, to target. So this is a decent risk reward trade for us. So we'll see what happens. We have got some red this evening. One I didn't cover yesterday, which actually looks pretty good, is GPAUD. We broke this double top here with this big blue. We did basically rally back from the low earlier today. I just think that's a sell back through this level. If I just go and look at GBPAUD now. GPAUD. She's very close to triggering us short at 173.40. So we'll see if we get in. But again, if our view is correct, that's a really good reward against risk. I'll look at one more pound pair. let's have a look at GBP CHF, which we looked at yesterday. We felt the rally was going to fade. Look at that, up she goes. Okay, now in terms of this one, I was looking at 111.60 this morning, okay, with a stop at 113.20. But in terms of GBP CHF, okay, we've now moved up through the 112 level, clear of it. So I'm going to reset entry tonight. I'm going to go 111.80, okay? Then a stop back behind this support level here, which is just behind 113. You can see a number of bodies where my line is. So 113.30. Okay, so we have moved to the upside. We'll just raise our entry. And we're looking for 106 and then the par level longer term on the downside. So there's some pairs that we're looking at this week. In terms of the markets, last month was a really good month for us. I'm hoping we're going to get a good month this month, fingers crossed. USD, big long-term uptrend. And also in terms of the crosses, there's plenty of swing trading opportunities around, and trend following trades as well. Right, I hope you found the video useful. That's the summary. Thank you for watching.